How do you think this all ties into tech this week, Brian, given everything else we've had thrown at us?
Yeah, well, we're just climbing out of the trenches 3 weeks after tech earnings here, and I would say the results actually were pretty decent. We had a couple companies miss, Facebook and Netflix. And so when you see news flow like this, I tend to think it comes and it goes and generally presents a buying opportunity. So I think we were here a couple weeks ago. There was a lot of macro headlines. Stocks were tanking, tech stocks in particular. And we said you got to stay strong and buy these stocks. And it worked out very well. When
you say buying opportunity, especially when some of the stocks you do cover have had double-digit gains this week, earlier in the week on earnings, where do you see those opportunities?
You know, I still, in our FANG group, Apple is still, I think, the most underappreciated stock in the world. So we have a $275 price target. It hit that $1 trillion mark, phenomenal earnings. We put out a report this morning on July sales from our Apple Monitor, record numbers. I still think value stocks in the FANGs, Facebook and also Alphabet. I think they're all great bargains at this level.
Rob, this week I can't help but notice, maybe this is a kind of counter story to FANG. Etsy is up 11.5%. Stitch Fix is up 16%. Roku up 27%. IAC up 24%. These are the very sorts of companies that these dominant technology players were supposed to undermine. But in their earnings this week, and just in general, they've been doing pretty well. Does that point to perhaps a vulnerability, at least in the overall storyline for some of these tech powers or not?
I don't think so. I think look, this is the biggest secular shift that's occurred in our lifetimes, and business models are being redefined up and down the board because of the influence of technology, particularly internet and mobile technologies. There's, I think, the idea that the giants take everything, I think, is overplayed, and these smaller cap names tend to move around, up and down a lot. I mean, they had very significant sell-offs in the early part of the year, came back strong through the middle part of the year, and now they're a little bit hit and miss. Within that cohort, we've also had some big moves down. Twitter, for instance, but that's pretty typical amongst that cohort of sort of mid-cap names in the internet space.
Yeah, I would throw in the mix to the list of stocks, John,
Yelp.
named Yelp, right? Match. And some other names. You mentioned Roku, but isn't that interesting?
It is. Grubhub is another one that's been at its highs recently. So it's kind of, I call it the junior varsity of FANG. And I think the same broader dynamics. Okay, what are these business models that can benefit from a computer in everybody's pocket and all the rest of it, and the secular shift to online buying, Wayfair, of course. So I think it's interesting. To me, it's the way a bull market tries to almost sustain itself, right? I mean, what's my edge ultimately right now in Amazon, except that I just still believe it's more of the same. So you look for the stuff that maybe hasn't, at least in a market cap sense, hasn't gotten so huge that it can't be moved pretty dramatically.
So, Brian, on a day like today where you're seeing U.S. markets at least somewhat spooked by geopolitical events and things that are going on in emerging markets, in Turkey, and currencies, is tech a defensive play? Is that one more reason to potentially buy into tech right now?
Well, I think some of the undervalued tech makes a lot of sense. Also, I know in our small to mid-cap software, they have very little international exposure. And we had a couple companies come out this week with phenomenal numbers, and they popped 20% after earnings. So that's another place to look as well. But I think, again, when you look at Apple, Alphabet, and Facebook, these stocks are actually good value stocks with attractive growth prospects.
And Rob, given the fact that we have seen some pretty dramatic moves in some of these smaller tech names that we just listed, what do you like right now?
I think the Yelp story continues to improve in terms of sentiment. People got too negative on their transition. That one can keep working. I think Angie's List is interesting, or Angie Home Services, sorry, really creating some strong marketplace dynamics. A very solid report here yesterday. I think an undervalued GARP name that's worth looking at is Akamai within that cohort of smaller caps in the internet sector. There's a number of interesting stories out there.